Welcome to this week's crypto update. So what's been happening out there this week? Well, of course, there is quite a lot happening both in the macro and within crypto itself, and certainly with Bitcoin. As we've said many times, Bitcoin is the king. It's going to remain to be so. What's happening at the moment? Well, lots of bullish news coming out there. It's funny, when the Bitcoin price goes down a little bit, it all gets very negative. Flip a switch, it goes up, and all very positive. The truth lies somewhere in between. But for now, usually bullish news. So first of all, Standard Charter just cranked up the bullishness in a new report. Jeffrey Kendrick, the bank global head of digital assets research, believes Bitcoin is about to smash a fresh all-time high of 120 grand this quarter. So that only gives it a couple of months to do that. We'll see, will that come to fruition? I have question marks on that. But the second part, Kendrick also sees Bitcoin hitting 200,000 by the end of 2025. Personally, I think that's very much on the cards, maybe even higher. And if you're Michael Saylor, of course, you have a different view. If people, same view, only much more expanded. If people knew what I knew, Bitcoin would go to 10 million tomorrow. Michael Saylor. Does he back up what he says? Well, once again, first thing, volatility is a gift to the faithful. It scares away the tourists, the lazy, and the already rich. What's he referencing there? Well, many people don't get into Bitcoin because they haven't done the research. They don't know what it's about. They don't know where it's going. So that's the lazy. Some people get into Bitcoin. It starts, going up and down in price. They go, okay, this is too volatile for me. They sell out. They're the tourists. They come, they go. And then, of course, they're the already rich who go, I'm already rich. I don't need Bitcoin. But that will all change. And of course, like I said, he backs up what he says with what he does. And Strategy adds an additional 1.42 billion Bitcoin with latest purchase. The company stack is now worth more than 52 billion. And Bitcoin's current price of 95 now, it's actually 96,000 right now. So amazing. And of course, the ETFs are not being left behind either. Last week, digital assets funds pulled in a massive 3.4 billion, and 3.19 billion of that was for Bitcoin. On April 28, BlackRock's IBIT ETF pulled in 970.9 million in fresh inflows. It's the second biggest day ever, right behind the 1.12 billion haul from November 7, 24. Since April 21st, so just 1 week, total inflows into US spot Bitcoin ETFs has hit 3.83 billion, a serious momentum shift. Bottom line, retail might be quiet right now, and the volatility will do that. But institutions, they're not just back, they're buying billions. In other words, people that are interested in what's happening within Bitcoin really should be watching what the big guns are doing, not the retail sentiment. Retail sentiment is mixed at the moment, despite the fact that Bitcoin's at $96,000. But institutions, since it's been down to 74 and all the way along, they continue to buy, and buy. They're looking long term. They're not too bothered whether it's 74,000, 80,000, 85, 90,000. They're looking long term, and they're looking at much bigger numbers. So, are governments following suit, or are they being left behind? Well, Arizona legislation passes Bitcoin reserve bills, moving closer to stockpiling crypto. The Arizona House of Representatives approved 2 bills proposing different methods that the state could use to establish a cryptocurrency reserve. And it's believed Arizona gets approved, other states will follow, and has been approved. What's happening in other states? Well, here we can say the various positions that the other states are moving along, where they're at right now and where they're moving to, but they're looking to do the very same. So we can see now that, we have institutions buying in, we have really bullish news. We have states moving in this direction. Of course, the government has already moved in that direction. And then you've got Chipeng Zhao, he's better known as CZ, and the former CEO of Binance. What has he got to say? CZ is now advising governments around the world on how to build their own strategic reserves. Just weeks after President Trump signed an executive order to create a US Bitcoin reserve, other countries around the world are following suit. And as CZ says, with one of the world's largest economies holding Bitcoin, that being the US, other countries are forced to do the same. The later you do it, the more expensive the crypto will be. Ultimately, what he's saying is he believes most countries are going to end up having a Bitcoin reserve, like most countries have a gold reserve. And the sooner you buy that, the better price you're probably going to get it at, because this is probably only going to go one way in the longer term. And of course, he says, I don't see Europe in this discussion. There is an exception. Montenegro is actually quite pro-crypto. We have an active dialogue with the Prime Minister there. Other than Montenegro, yeah, Europe is kind of missing the map. What's new? Europe tends to be late to the party when it comes all to this. They prefer, dealing in regulation rather than adoption of stuff that's coming new. It's a shame to see as a European myself, but that certainly seems to be the way. Out of 200 countries, 12 countries have just started, right? Even the US is just starting. Everything's just starting, according to CZ. But ultimately, what he's saying here is this is just the very, very beginning. Out of 200 countries, there's only 12 actively getting involved here. US is one. China already has a load. But on top of that, we have the states within China now doing it as well. We have the ETFs are setting records. We have big companies buying up as much Bitcoin as they can, creating their own reserves. This is just the very tip of the iceberg as to what is coming. Where's the price of Bitcoin going to end up? Well, I think it's upward only from here. Of course, there's volatility. There'll be ups and downs, but an overall longer term trajectory, it looks like it's going to go major. The US is exploring budget neutral ways to add Bitcoin to the balance sheet. Other nations won't just sit back and let them stack on their own. So there's more adopting this as we go. And the ones that adopt it the latest will pay the most for it. So when does the bull run kick in? Are we already in it? Maybe it's gone. Who knows? But ultimately, my take is this. I think we're literally have only gone through the beginning stages of this Bitcoin run and crypto run in general. I had said in previous weekly updates that there was a number of things I think needed to happen for us to really get into the next bull run. So number one, tariffs. Trump, I believe, has purposely created a huge amount of volatility in the overall macro, in the S&P, the various markets, and of course in crypto itself. I think they're doing this on purpose because when there's huge volatility, the majority or a lot of money goes into treasuries. The more treasuries that are bought, the lower the interest rate is on the treasuries. The US government needs to refinance $9 trillion this year, so they need that price to come down. As by creating volatility, more people buy treasuries, the price comes down and they can flip their debt at a much cheaper rates. At the same time, they want the Fed to reduce their interest rates. The Fed isn't going to reduce their interest rates unless they see the jobs market starting to decline and inflation starting to come down. While jobs are good and inflation is going up, they're not going to reduce interest rates. Trump is putting huge pressure on them doing that. And by doing what they're doing, number one, they've got Doge in there with Elon Musk, who is taking jobs apart in the whole government sector. The government sector has been the biggest employer of new jobs over the last 4 years. At the moment, they're doing the opposite. They're not taking on more. They're actually reducing it overall by Doge, and they're reducing their cost by doing that. At the same time, he's created this uncertainty with tariffs, but by creating this uncertainty now, we also can see that it's highly likely, and looking at trueflation, it looks like interest rates are coming down. If interest rates really start to reduce and the job market starts to reduce, the Fed's going to be under massive pressure to reduce interest rates, which is exactly what Donald Trump is looking to do. So when will all this happen? Well, let's have a look. And the other thing that would be very useful, of course, to this all over thing is if they can actually put an end to the war in Ukraine and maybe do a good deal for themselves while doing it, because that in turn will put more pressure on more countries around the world to do deals with them on the tariffs, but also give them good standing to be able to do with the likes of Russia. And the more countries they have it done with, the more pressure will come on China to also do a deal. So what's been happening? Well, Elon Musk says Doge has saved 160 billion, bear in mind 1 trillion was the target, in government funds, and he plans to reduce his time with the agency moving forward. Interesting, come back to that. Secondly, the US and Ukraine signed the deal on Wednesday on a joint fund to invest in Ukraine's reconstruction and will give Washington access to the country's natural resources. Well, imagine that. The US get what they want. They get the resources out of Ukraine. Imagine that. I wonder, was that all pre-planned? The nation signed the accord after months of fraught negotiations. The US economy contracted for the first time since 22. The first quarter GDP growth came in an annualized rate of minus 0.3 Wednesday. Importantly, all the economic data included in the report happened before Trump's Liberation Day, and it also reflects a sharp dip in government spending. Okay, and one more. Companies are slowing hiring in April. Private sector payroll rose by 62,000 in the month, the smallest gain since last July, and below 147,000 seen in the prior month. Hospitality jobs posted the biggest gain, gains, while education and health services lost most jobs. So what are we seeing here? We're seeing the government are reducing the number of people they're employing. Companies are reducing the number of they're employing. The US economy is contracting, which you would say would lead to inflation reducing, and it looks like that's already happening. And at the same time, we have Elon Musk starting to pull back from the number of jobs that he's cutting. So we're getting to a point, I believe, where we're seeing that job destruction happening, exactly what they wanted. We'll see inflation reducing, and this will give put a lot of pressure on the Fed to reduce interest rates, which is exactly what the government want. With all the volatility, people are buying treasuries, the cost of those are reducing, and the government are going to be able to flip their debt. At the same time, I think we'll see over the coming weeks and months that the government will do deals with the various countries around the world, and at that stage, they'll be able to come out and say, okay, here we go, we've done all these deals, everything is rosy, the tariff thing, we've balanced all that out, interest rates are reducing, we've flipped our debt, now we're going to give huge tax breaks to everybody earning $200,000 or less, and I think we see liquidity coming back into the market and we go to races. The big question is, will we see a recession in between? And in recent weeks, Goldman Sachs, Morgan Stanley, UBS and other banks have raised their recession odds while cutting GDP forecasts. And also on Tuesday, we see in a rare moment of consensus, prediction markets, as we see in the chart above, have the same outlook as the old guard, the banks. So on the betting platforms, odds for a US recession this year spiked to 65% from 55% from just the day before. So what's this all telling us? It's telling us everything is unbelievably bullish with Bitcoin and hopefully crypto to follow behind that. At the same time, we see all the pieces that Trump has put into place looks like it's coming to fruition to get what he wants, to be able to flip the debt for much cheaper. Once they get that into position, I think we see the deals getting done across the world, and I think we go to the races. So I believe, are we moving towards a recession? I think the answer is a yes, by design. Will we get to a recession? If they can get all these deals done and get the Fed to move the way they want them to move, I think we can move towards it without getting there. How long will that take? It'll take weeks, probably months. But when we get to the other side, the upside, I believe, is extraordinary. Watch the space. Hopefully you found that useful. And we'll talk to you all on the next one.